Hello and welcome everyone to the December Policy Insights. I'm happy to have here an old friend, Brunello Rosa, who already gave us an interview back in the days. Brunello is CEO and co-founder of Rosa and Roubini, and also a visiting professor in various prestigious universities around the world, particularly in London. Brunello, we had an interview with you back in the days talking about the macroeconomic case for CBDC, the geopolitics of this new form of money issued by states. But today we're going to talk about private money and particularly stablecoins. So, you know that in the UK, we're hoping to see a new framework for stablecoins money. And I wanted to ask your opinion on why stablecoins can be important for the British economy.
Sure, more than happy to discuss this, I would say, in a really friendly Q&A kind of context. So I will start by saying following, which is kind of well known, but it's important to repeat it, I think. When we think about money, most of the money that is in circulation is not public money, so to speak. It's not central bank money, it's bank created. Now, through the loans in particular, so the lending activity that banks do generates the money that is in circulation. Back in the time, the idea was that there are people who save, they create deposits, part of these deposits are lent out by banks. But nowadays, the view is kind of the opposite. Banks extend those loans, and by doing so, they create the deposits, then is used to do the purchases for which the loan was asked. So it's kind of the other way around. Why did I make this kind of premise to the discussion? Because when we move to the old traditional way of doing things, the one that we are totally used to the digital format, what is going to happen, in my opinion, it will be sort of replica of what happened in the traditional way. So cash and banknotes, coins, and so on, that will be replaced eventually by CBDCs, central bank digital currency. There will be for sure a period of cohabitation between coins and banknotes and CBDCs, but eventually there's no reason why we should continue playing with pieces of paper that can be lost, damaged, and so on, right? We will use something a bit more sophisticated. The same way everybody now writes emails instead of writing letters with pen and paper. So when central banks will do so, what will banks do? And which they accept CBDCs to be issued? Because if anything, the big enablers of CBDCs, the ones that will really allow CBDCs to be distributed among the general public, would be in fact banks themselves. Central banks will not do all those activities that the commercial banks do when they onboard clients. They will not do the KYC. They will not do the AML. They will not do counterterrorism financing checks and all the rest of it. None of it will be done by a central bank. So the central bank will ask, in the most likely setting, most central bank digital currencies, commercial banks to do all these activities, the onboarding, the issuing of wallets, and so on and so forth.
Well, that's extremely challenging, I think. Not challenging, interesting, because I think a little bit, counterbalances the opinions of those who see stable coins and all of these new forms of digital money as a way to disintermediate the banking sector. But what you seem suggesting is rather the opposite, is that like maybe the banking sector up to now has been cautious into understanding what's the new form of money because of their low-end legacy system. But then in the end, they will be pleased to have a solution to their own problems, to a world that changes and they need to adapt to. Is what I said correct? Or like, please feel free to say no.
No, I mean, it's exactly the point. People fear that the vast majority of the population will switch from traditional bank accounts to the new central bank account. But the reality, as I was trying to say, is that this central bank money will still be held in some perhaps segregated or not segregated, we will see, slightly segregated account at the commercial bank you're used to. And so what commercial banks are trying to achieve is, okay, in exchange for all these activities that you central bank are asking me to provide, I say the CTF, the EML, the KYC and all the rest of it, they say, give me something in return. The one thing that for sure they want to is that it needs to be a two-tier system in which they are involved in issuance of these CBDCs in kind of implementation terms. So clearly the liability will remain that of the central bank, otherwise there's no point in moving through this messy process of issuing CBDCs. So the ultimate entity liable for the CBDC would be the central bank. But where would you physically, so to speak, since everything would be dematerialized, but physically put this money? You would put in a wallet that is going to be issued by your own commercial bank. And that means that in the various list of accounts that you have at your traditional bank, you know, Lloyds, HSBC, Barclays, and you name it, one of them would be digital pounds. And switching from one to another would be seamless, of course. At the same time, there would be probably limits to the amount of deposit that you can hold in terms of CBDCs, because otherwise, and this is correct to say that banks are a bit scared, why would anyone want to have a commercial entity as your counterparty when you can have as your counterparty the central bank that by definition cannot default? So there might be limits to the amount of digital sterling that you can use. And then, and here I think is really the juicy part of the discussion is, okay, that's something I can do for you, but there's something more I really want to, and is the possibility of issuing my own digital money, the same way I've done so far. And the way this, in my opinion, will be implemented would be in terms of stablecoins. So stablecoins do not require banks to be issued. I made many times the example of the Avios points or the NECA points and so on. I mean, something that can be used so far only for limited purchases, but once legislation is in place, you can use it in many other circumstances.
Do you see any similarity for, between stable coins and what it has been, with all the differences of the case, of course, but the successful story of e-money in the United Kingdom?
So e-money has been effectively, how can I say, widespread, and everybody now uses e-money in the way that we see every day. And I would say cash is somehow disappearing, not totally. There are jurisdictions in which it's going way faster than the UK, Sweden being an example, but it's not the only one. There are other countries in which effectively physical money is disappearing, so all the rest becomes e-money. But the real question is, okay, let's assume the commercial banks will be able to issue their own stable coin tied to their effectively capitals and accounts and so on. There are two versions of it. There's a very prudent version of narrow banking, so to speak, in which yes, the commercial bank can issue its own stable coin, but that needs to be backed by very liquid, very short-term type of assets, in which case there can be some lending, but the maturity transformation will be limited, and that ensures stability for sure. Or the second version is no, commercial banks will be able to issue stable coins and start an activity of lending of it on a much larger scale, on much longer maturities. But of course, the regulators will ask these to be backed by the full capital of the bank, by lots of liquid instruments, being any form of central bank money, such as reserves, also very safe assets such as government bonds, and so on and so forth. So extremely liquid and ready to dispose assets in capital, of course, of the bank, which means that at that point it becomes a risky part of the bank business. But I don't see why this cannot be happening at some point. It is likely that at the very beginning we'll go for the narrow banking solution, I would say, something extremely limited, not DeFi, so to speak. So yes, you can lend it out, but with lots of limits. But as we have seen so many times in finance, you start small and over time you get bigger. With the caveat, of course, that no one wants to create the potential for financial instability episodes down the road. So
That
regulators
was my
will
next
always be
question.
very Hmm?
That was my next question.
Exactly. So go ahead.
So how can we can also, enable this to happen in a safe environment? What are the requirements that we need to ensure to be implemented?
So I would say that the key remains, as for any other banking activity, regulators know it very well, that banks need to hold lots of capital, lots of liquidity against potential, first of all, liquidity shortages. And when there's no liquidity issue anymore, it becomes a solvency issue, there's plenty of capital held against those assets. And already now we see that central banks and regulators are asking commercial banks to increase, in fact, the liquidity holdings, the capital holdings, just to withstand what is about to come in terms of the current environment and potential recession or ongoing recession, if you listen and believe to the forecast of the bank.
My question is not now, is because what I'm thinking is, okay, but someone who listens to us and probably is not too familiar with how the money system works, not the money as a business, but money as a physical thing that we were used to touch up to a few years ago, and now we still have in the back of our minds, but not everyone has already made a shift to a digital environment and a digital economy. So what you're describing is a very normal evolution. But what I think that I would love to ask you is, why do you think that this evolution has happened? Like, why do you think that banks should, for example, start seeing stablecoins as to something that they will need, not something that they will destroy them or disintermediate them? And why someone who is not familiar with this, not from the professional perspective, but the classic person who goes to the supermarket every day and says, but why do I have to be bothered of having stable coins to pay? And maybe they will never even know how now they do not know that they use e-money, for example, to pay with their credit card. And how do we get to the need for stable coins and CBDCs? What has happened? What has changed that brought us to say, okay, well, now we have to implement this, otherwise we are going to lose the next big challenge? What has really happened in the world that someone has
So,
not been able to see yet?
absolutely. So the point is, the world evolves all the time. Things happen even if you might not want them to happen. At some point, somebody invented an engine with the rotation system and said, why don't we apply four wheels to it? And here is the car. And people said, we have a perfectly valid means of transportation, either for work or leisure and so on. And carriages and with horses. And why do we need a car? The car, then you need petrol, and God knows where we're going to find petrol and so on. So the world goes ahead, technology evolves, and everything now is being digitalized. That's the big thing. Everything is digital at this stage. And unfortunately, or fortunately, depending on your point of view, it will continue to do so in the future, but more so in the future. There are people that are developing the so-called metaverse, whether you like it or not. But the way you can think about it is nowadays you go to the website, you log in, you make your purchases, and it's kind of a very ad hoc experience. You go to your website of shop A and the website of shop B, and then X, Y, and Z. In the future, there might be a situation in which you enter some form of digital mall, if you want, and you visit digital shops. And once you are in this digital shop, and you do make a purchase, and that doesn't need to be a physical purchase, could be an insurance policy, which is something totally immaterial, for example. The way you pay for it would be with some form of digital money. And it can't be all central bank money, because central bank money is there just to provide the foundation trust that is needed for private money to be issued. As I said before, the vast majority at the very beginning, that's why I made these premises of money, is bank money, is not central bank money. It is and will remain private sector money. So banks will need to evolve in this new form of digital assets, where lots of stuff that today is material would be dematerialized and offered in terms of digital assets. To make those purchases, you would need central bank money, for sure, to a limited extent, and then you need bank money. Bank money will be in some form of stablecoin. Most commercial banks will issue their own, others will piggyback on other banks and other commercial banks, stable coins. There may be a healthy competition of which stablecoin will eventually prevail. We have seen all this numerous times in the web. There are 10, 100,000 companies that start more or less with the same concept. Eventually, you have one, two. Think about the Amazons of the world, think about the Netflixes of the world, and so on and so forth, right? It starts decentralized and eventually gets centralized, then because the economy of scale always eventually prevails in complex systems. So I think that's why banks need to embrace this revolution. They need to be ready for DeFi and the new form of finance. Also because, and I conclude this part, is why not having DeFi? You know that at the first crisis, as just said, 90% of these people would disappear. Some would go bankrupt, tough luck. Others would be acquired by banks, which eventually will have their own DeFi, and so they would become even bigger and more relevant. That's always been the case in the last decades. I don't see this changing in coming decades.
That's very interesting. And I think that, in the UK, we can say that we've been leading in the fintech, which has done to the banking system exactly what you have described about what will happen eventually with DeFi and stablecoins. So I think that someone should deeply think of this and, look at the past, see how successful it has been here, and ask themselves what we can do next to ensure that the UK remains at the forefront of financial innovation and financial technology. Very good. I have a cheeky question, if I may. Timings, what do you see coming first? Stablecoins, CBDCs. I mean, stablecoins are already there. CBDCs,
Yes.
talking about it, but how fast and how quick do we have to be not to lose the global competition on this?
Well, you need to be super fast. We're already late. In terms of CBDCs, we are 8 years late compared to the People's Bank of China, so the Chinese central bank, which has already issued its own CBDCs, rolled out. It's been tested at the Winter Olympics in Beijing. It's been rolled out in many provinces, and eventually there will be some countrywide adoption. And perhaps in a non-democratic regime, it's easier to impose something. But again, they are used to this kind of payment. It was Alipay, WeChat Pay, right? And then it was the government who said, wait a minute, we are losing control of all this information. We need to go back there. Okay, so they're used to, eventually it will be WeChat Pay, Alipay, and the ECNY that would be less produced. So we are already late. With stable coins, we can do slightly faster because again, it's private sector initiative. As long as you have enough stable, in fact, assets, then you can issue your own stable coins. Initially, people will, exactly as you said, why should I bother? I have already enough, but eventually you will realize how important this is. For CBDCs, it seems to me that we still need to push a bit for the authorities. As I said many times, CBDCs are not a question of if, but a question of when and how. So the sooner we get them, the better we get them, the more proficient we will be in responding to this international competition. People say the second part of this decade, maybe. If this means 2026, fine. If this means 2029, too late. So it's the sooner, the better. In this part of this first half of the decade, possibly. If it's immediately in the second half, that's fine, but not beyond that, I would say.
And that's for CBDCs, while stable coins, well, there are already lots of stable coins who have proved to be resilient to market crashes. So like maybe they can be the way forward, or I don't know if your idea of stable coins is something completely different from the stable coins that we have now, but that's maybe for another time. Before I let you go, you touched on a very, very important thing when you said the Chinese government has realized they were losing control of lots of information. How can we be sure that we continue to live in a democratic society? Like, I don't want to live in a place, in a state where the government knows where I spend my money. I don't think everyone wants this. And I think that the privacy concern is clearly something that terrifies correctly our lawmakers and policymakers. So what is the response to this? And how can we, as you know, the President of the United States has clearly stated in his executive order on digital assets, create something that respects our democratic values?
So there are, I would say, two sides of this equation, if you want. On the one side, there's the policy choice. On the other side, there's the technological choices. So let's start from the policy choices. In a democratic society, you need to continue to respect people's privacy. And this is something that needs to be stated very, very, very clearly in any legislation enabling CBDCs or stablecoins to be adopted. I cannot foresee any legislation in a democratic society that doesn't foresees and enforces the continued privacy of people's behavior and payments and so on. And that has already been subject to several stresses during the pandemic, as you know, when the government wanted to know where we went, who we met with. We were forbidden from meeting friends and family, even in our homes. It was the level of intrusion. It was massive. way bigger than any intrusion, so to speak, that may occur with the issuance of CBDCs. Never check who we are getting the coffee with, okay? While during the pandemic, that was the requirement. Clearly, you might not want to tell anyone that you had coffee that day at the exact place and exact time. There's way too much information we are giving for just getting a coffee to the bar. Understood. So at that point, there's the second side, which is of the equation, which is the technological choices. And there can be technological solutions that can be adopted for that not to happen. So the first one would be, for example, the transactions below a certain threshold can be chosen, 200, 300 pounds, 1,000 pounds, you choose. The transaction remains fully anonymous. So not even by trying to check back who did that transaction, that might not be made possible. Transaction happens below a certain threshold, all the history of that transaction is immediately cancelled, for example. Or even for larger transactions, but even for smaller transactions, it might be a system of pseudonyms in which nobody will ever know who made that transaction unless there's a very specific request of the judicial authority that needs to reconstruct and track the transaction of a particular individual subject to an investigation. Okay, that's another way of doing things. But again, there are ways to protect people privacy in this world, and admittedly, the more we leave digital traces, the more we are effectively controlled. But that's not different from, it's just we don't realize, not different from making a phone call or actually carrying our own mobile phone, because we are telling the companies that give us the service, the Vodafones and so on of the world, exactly where we are. And they know exactly who we called, for how long, right? Then the judicial authority can always ask this information and obtain it if there's a valid reason to go back. So this is not different from what is already happening. It's just we don't realize. And I think, therefore, that there are solutions that can be put in place to guarantee people's privacy as much as possible, being aware that in the digital world, we are meant to leave digital traces, whatever we do. So it's a question of costs and benefits. The same thing when we pass from the carriages and horses to cars. Yes, we had to accept that we create pollution, and we know how dangerous this is. We create noise. There can be car crashes, there could be all sorts of incidents, all sorts of stuff. We have to rewrite the entire regulation on how to stay on a road. Nonetheless, nobody will ever say, what a stupid idea was to create cars, because that allowed people freedom. We could go to places much faster, much more conveniently, and so on and so forth. So it's exactly the same thing. People tend to be scared about innovations, but we went through these processes endless time in history. We always made it, and it was always a positive development in the end.
I like this. I think that it shows us that we are not looking for solutions that are solutions to problems, but we have solutions to problems, which I think exactly what we want to say, what we wanted to say. Brunello, I'm very grateful for your time. Thank you very much. I know that you are also independently advising the consortium for the digital FMI, financial market infrastructure, which has been formed after Project New Era. And so I wish you all the best into this journey, and the Payments Association has supported this since the very beginning. So we are looking forward to see what the pilot will come up with and the solutions that they're going to test. Thank you again for your time. Speak very soon.